At $450,000 a year, you're in the top 1%, and somehow, you still don't feel in control. That number is supposed to mean something. It's supposed to be the line, the moment where everything finally clicks into place. The pressure eases, the decisions feel lighter, the background stress gets quieter. You get to sit back, breathe for the first time in years, and say, okay, I made it. That's what people imagine, right? That once the income gets high enough, the anxiety disappears. Once the salary gets big enough, life starts feeling simple. Once the bonus clears, you finally stop worrying. But when you actually get there, it doesn't feel like that. Not really. Because the money comes in, and before you even have time to emotionally process it, it starts moving. Taxes take a huge cut. Your lifestyle quietly expands to match your income. The apartment gets better. The rent gets heavier. Dinners become more expensive. Weekends start costing more than entire months used to cost. The people around you expect a certain kind of life from you now, and without even noticing it, you start living up to that expectation. Then the rest gets pushed into investments, accounts, transfers, funds, plans, almost automatically. You don't really hold the money. You just manage it. And that's the strange part no one prepares you for. At some point, you look at the number, and it doesn't feel like power anymore. It feels like maintenance. Like you've reached a level where you're earning more than almost everyone around you, but you're still operating inside rules you didn't create. Still reacting to systems you don't control. Still playing a game that was designed long before you ever showed up. And once you notice that, it's hard to ignore. Because if income doesn't give you control, then what actually does? And if you're serious about understanding how money really works, not the surface version, not the simplified version, not the motivational version people repeat online, but the real structure underneath it, then hit like, subscribe, and stay with me. Because this is where the story starts to shift. You probably know someone like this. Or maybe this is you, vice president at an investment bank. Not the kind of title that makes strangers stop on the street, but inside the system, everyone knows exactly what it means. Years of grinding, late nights that blur into early mornings, meals eaten at a desk without really tasting them, deals that don't care what day of the week it is, calls that happen when normal people are already asleep, constant pressure to perform, to deliver, to not be the person who slows the machine down. And the compensation reflects it. The apartment is exactly where it should be. Not loud, not ridiculous, but precise. The kind of place the restaurants are familiar now. Reservations aren't a big deal anymore. The flights are business class when they need to be. The clothes fit better. The watch isn't flashy, but people who know. Life looks right. Everything checks out. And for a while you believe it. You tell yourself, this is it. This is what I worked for. This is the level most people never reach. And then one day, you find yourself in a room that feels just a little different. The meeting itself is nothing unusual. Acquisition financing. Your team has done the work. The models are tight. The assumptions have been stress tested. Every scenario has been thought through. Downside case, base case, upside case, sensitivity tables, debt capacity, covenant, coverage ratios. Nothing has been left to chance. You've rehearsed this presentation. You know where to pause, where to emphasize, where to push, where to let the numbers speak. You walk through it like you always do. Slide by slide. Clean, controlled, confident. This is your environment. This is the room you trained for. But something feels off. Because while you're talking, he isn't. He's just sitting there, watching, listening, letting the silence stretch slightly longer than what feels comfortable. Not interrupting, not reacting, not nodding too much. Just observing. And that silence starts doing something to you. You keep going. You stay polished. You stay sharp. You finish the last slide. And then there's a pause. Not awkward. Heavier than that. The kind of pause that makes you suddenly aware of every sentence you just said. Every assumption. Every number. Every confident answer you delivered. And then he asks one question. Not complicated. Not technical. Not even long. Just one precise question. About how much leverage the structure can actually handle when things don't go as planned. You answer. Of course you answer. You've prepared for this. You walk through the downside. You reference the coverage. You explain the cushion. You know the material. And just like that, the meeting ends. Less than 10 minutes. That's it. And as you walk out, something doesn't sit right. You can't fully explain it yet, but you feel it. Because you realize everything that happens next, every outcome tied to that deal, every million made, every risk taken, every upside that could unfold, is no longer in your hands. You ran the process. You built the case. You did the work. You understood the deal better than almost anyone in the room. But you didn't make the decision. And that realization lands heavier than you expect. Because for the first time, you see it clearly. You're inside the same system. But you're not playing the same role. And once you see that, you can't unsee it. That's when it really starts to make sense. There are levels, even inside the 1%. Level 1, the high earner. At the first level, you're the high earner. This is where most people think the game ends. You make enough money to change your life. And you do. You upgrade everything, almost without thinking about it. Where you live, how you travel, what you wear, the gym you go to, the restaurants you choose without checking the menu first. Even the way people treat you starts to shift. Conversation change. Expectations change. People assume you're doing well before you even say anything. For a while, it feels like control. Like you've finally broken through. Like you're no longer chasing. You've arrived. And honestly, it's hard not to believe that. Because when you've spent years climbing, when you've sacrificed sleep, weekends, relationships, health, peace of mind, and then the number finally gets big enough, of course it feels like a win. It is a win. But if you slow down for a second and really look at it, the equation hasn't actually changed. You're still trading time for money. More hours, more pressure, more responsibility, more income. Pull back even slightly, and the whole thing adjusts immediately. The growth looks impressive from the outside, but underneath, it's still linear, step by step, year by year, promotion by promotion, performance review by performance review, bonus cycle by bonus cycle, and eventually, you start to feel the ceiling. Not dramatically, not all at once, just quietly. You realize you can't scale yourself forever. There are limits, physical limits, mental limits, emotional limits. You can push harder, but only for so long. You can take on more, but only to a point. You can keep telling yourself you're built different, until your body starts reminding you that you're not a machine. And no matter how high the number goes, it still depends on you showing up. You are still the engine. You are still the input. You are still the thing that has to perform. That's when something shifts. The confidence is still there, but now there's a layer of doubt underneath it. Because you start to understand something most people don't see from the outside. High income doesn't mean leverage. It just means you're playing a more intense version of the same game. And that creates a strange tension. Because you are successful. You are ahead. You are earning more than most people ever will. But deep down, you can feel that your freedom is still conditional. As long as you keep performing, the machine keeps rewarding you. But the moment you stop, the machine notices. And that is not control. That is dependence, with a better view. Level 2, the accumulator. And then, something changes. Not in a dramatic, cinematic way. No lightning strike. No single moment where everything flips. No day where you wake up and suddenly feel wealthy. It happens quietly. Your net worth crosses a point where the numbers begin to move. Without you. At first, it almost feels like a mistake. You check your accounts after a strong market year, maybe late at night, after work, half tired, half curious, and the increase is bigger than you expected. Bigger than what you normally associate with just investing. You stare at it for a second, refresh the page, check another account, then another, and it makes you pause, because nothing in your daily life has changed. You're still working the same hours, still sitting in the same meetings, still answering the same emails, still carrying the same stress, still waking up with the same calendar pressure waiting for you. But financially, something is different. It's subtle, but it's real. You're no longer the only source of your income. And that realization doesn't feel loud. It feels strange, like something is happening in the background, and you're only just starting to notice it. This is where you become the accumulator. Somewhere between 1 and 5 million, the shift isn't really external. It's internal. You start paying attention to things you used to ignore. Where your money is sitting, how it's allocated, which assets actually perform, and which ones only feel safe because they're familiar. You notice fees. You notice tax drag. You notice concentration. You notice that cash feels comfortable, but comfort can be expensive. You start questioning decisions you used to make automatically, and your questions change. You stop asking, "How do I earn more this year?" And you start asking, "How does this money grow without me?" That question is different. It creates a new part of your mind, a quieter part, a more strategic part. You start thinking in terms of compounding, not as a concept from a finance book, but as something you can actually see happening. A small percentage on a small amount feels abstract, but a small percentage on a meaningful amount starts to feel real. And that's where your relationship with money begins to change. Because now money isn't just something you receive. It's something you place, something you monitor, something you protect, something that can either sit still or quietly multiply. But even here, something feels incomplete. Because yes, your money is working, but you're still not the one creating the opportunities. You're choosing from what's available, reacting, allocating, adjusting, moving between public markets, funds, accounts, advisors, asset classes. You're getting smarter. You're becoming more efficient. But you're still inside the system. You're just playing it better. And at first, that feels like enough. Until you start meeting people whose opportunities don't look like yours. They're not choosing from a menu. They're being invited into rooms. And that's when the next level starts to reveal itself. Level 3, the investor. That changes at the next level. Somewhere between 5 and 20 million, you start to notice something new. Opportunities don't just appear anymore. They arrive through people. You're no longer just browsing markets, or analyzing public information, or reading the same reports everyone else can access. You're being introduced. Someone brings you into a fund. Another person invites you to look at a deal that isn't public. A founder is raising quietly. A partner mentions something off market. A friend from a different room says, "You should probably see this." And the strangest part is, none of it feels advertised. Because it doesn't need to be. At first it feels random. Like maybe you're just getting lucky. Like you happen to know the right person at the right time. But over time, you start to see the pattern. These opportunities don't move through information. They move through relationships. And that realization changes everything. Because suddenly, access becomes more important than knowledge. You could read every report, study every trend, analyze every data set, listen to every earnings call, track every market signal, and still miss the deals that matter. Because they never show up where you're looking. They don't appear on the screen. They don't announce themselves to the public. They circulate quietly, through trust, through reputation, through warm introductions, through rooms where people are careful about who gets invited in. This is where you become the investor, not just someone who allocates money into assets, but someone who is allowed into rooms where those assets are created. And once you're inside those rooms, you realize something else. Owning small pieces isn't the same as owning something that matters, because a tiny allocation can make you feel included. It can make you feel like you're in the game. But real influence comes from size, from conviction, from access, from being important enough that your capital changes the conversation. And that's when you start to understand a deeper truth. The rich don't just buy better assets. They see different assets. And that difference is everything. Level 4, the owner. At some point, the way you look at ownership starts to change. It's no longer just about diversification. It's no longer about spreading risk across different assets and hoping the average works out. It's no longer about asking, "Do I have enough exposure?" You start asking something different. Do I have influence? Because somewhere between 20 and 100 million, your capital becomes large enough that it doesn't just participate in outcomes. It starts shaping them. You're no longer just buying into companies from the outside. You're stepping into positions where your presence actually matters, where your capital isn't just another number on a cap table. It becomes a factor in decisions. And that's where the experience changes completely. You sit in rooms where real choices are made, not theoretical choices, not projections on a clean slide, not abstract scenarios in a model. Actual decisions, the kind that determine what happens next. Who gets hired as CEO? Whether the company expands into a new market, whether it cuts costs or doubles down, whether it raises more capital, whether it sells, whether it waits, how aggressively it grows, how much risk it takes. And for the first time, you feel the connection. When revenue grows, You don't just see it on a report. You feel it. When margins improve, it isn't just a line item. It changes the weight of the whole room. When something goes wrong, when costs spike, when strategy fails, when management misses something obvious, when things don't move the way they were supposed to, you feel that too. There's no distance anymore. Ownership removes that separation. And in exchange, it gives you something most people spend their entire lives chasing without ever quite reaching. Control. Not absolute control. Not perfect control. Not the fantasy version where everything obeys you. But real influence. The kind that actually moves outcomes. The kind where your opinion matters before the decision is made, not after. And once you experience that, even briefly, it's hard to go back to being passive. It's hard to go back to sitting on the outside, waiting for quarterly updates, reading reports after the fact, hoping someone else made the right call. Because now you understand what it feels like to sit on the inside. You understand the difference between owning something and being exposed to it. But even this level has its own limits, because as your capital grows, the game starts to change again. The question becomes less about what you own and more about where the weight of your money should go. Level 5, the allocator. There's a point where focusing on individual companies stops making sense, not because they don't matter. They do, but because your capital has grown beyond the scale where individual decisions are efficient. When you move past 100 million toward a billion, your perspective shifts. You stop asking, is this a good company? And you start asking, where should capital go next? That question feels colder, bigger, more detached. But it's also more powerful, because now you're no longer evaluating single opportunities one by one. You're thinking in flows, sectors, cycles, movements. You look at entire spaces, energy, infrastructure, credit markets, technology, real estate, private markets, and you start positioning capital at scale. Not tens of thousands, not a few million, hundreds of millions at a time. And once you do that, something interesting happens. Your decisions don't just affect your own returns. They create movement. You allocate into a sector, and suddenly that space becomes more active. More deals, more attention, more capital follows. More people start building around it. Opportunities expand, not just for you, but for everyone operating inside that ecosystem. It's like redirecting a current. You're not controlling every detail. You're not touching every transaction. You're not managing every company. But you are influencing the direction of the flow. And at this level, your role becomes clearer. You're not the one analyzing every balance sheet anymore. You have teams for that. People who live inside the details. People who read the footnotes. People who stress test the assumptions. People who sit inside the models for hours until the numbers either hold together or fall apart. Your job is different now. You're the one deciding where the weight goes, where capital concentrates, where it accelerates, where it pulls back, where it waits. And that's what makes this level powerful. Because money stops being something you place and becomes something you direct. But even here, even at this scale, even when your decisions can change the temperature of an entire market, you're still operating inside a system that already exists. You are moving through the architecture. You are using the channels. You are pushing capital through structures that someone else built before you got there. And eventually, you start to see that too. You start to realize that the next level isn't about owning better assets, or allocating more capital, or finding the next sector before everyone else. It's about something deeper. The structure itself. Level 6. The architect. Because above allocation, there's another layer, one that almost never gets talked about. At this level, the game is no longer just about capital itself. It's about the structure that capital moves through. You're no longer just investing in funds. You're creating them. You're not just joining deals. You're designing the vehicles that make those deals possible in the first place. And the shift here is subtle, but profound. You stop thinking about returns in isolation, and you start thinking about efficiency, how capital flows across borders, how it's taxed, how it's protected, how it's held, how it's transferred, how it's positioned so it can move freely, grow consistently, and sustain itself across decades, not just years. You begin working with structures most people never see: trusts, holding companies, layered fund systems, jurisdictions chosen for specific advantages, legal frameworks that determine how wealth behaves over time, agreements that decide who controls what, when things go well, and when things go wrong. It's no longer about reacting to opportunities. It's about building systems that continuously create them. And at first, it feels abstract, almost too far removed from anything tangible. You're not looking at a building. You're not looking at a product. You're not even always looking at a company. You're looking at arrangements, rights, claims, entities, permission, flows, and, to someone outside the room, it can look almost invisible. But then it becomes clear, because you realize these structures are what everything else depends on. The salaries, the investments, the ownership, the allocations, the deals. They all sit inside this larger architecture. And once you understand that, you stop following the system. You start shaping it. You're no longer asking what the rules are. You're deciding how they work. Not for everyone. Not in some absolute sense. But inside the world you control. Inside the vehicles you build. Inside the capital you organize. The rules become design choices. And when that realization fully settles in, everything below it starts to look different. Not wrong. Just incomplete. Because now you can see the layers. You can see how each level connects to the next. How each step builds on the one before it, but also limits it. And once you see all the levels clearly, once you understand how the entire structure fits together, one final realization hits. The top was never just about having more money. It was about having more control over the rules that money moves through. That's the part most people miss. They think the 1% is one group, one lifestyle, one destination. But it isn't. It's a staircase, and each level changes what money means. At one level, money is compensation. At another, it becomes accumulation, then access, then ownership, then allocation, then architecture. And the higher you climb, the less the game is about earning, and the more it becomes about control. Control over time, control over access, control over decisions, control over structure. But even then, there is no level where everything becomes effortless. There is no point where all pressure disappears. It just changes shape. At the bottom of the 1%, the pressure is performance. Can you keep earning? Can you keep showing up? Can you keep justifying the number? In the middle, the pressure becomes judgment. Can you choose correctly? Can you trust the right people? Can you avoid mistakes that look small at first, but become enormous later? And near the top, the pressure becomes design. Can you build something that lasts? Can you structure wealth so it survives complexity? Can you create systems that keep working when you're not in the room? That's the real difference. Not the car, not the apartment, not the restaurants, not the number people imagine when they hear top 1%. The real difference is the role you play. Are you being paid by the system? Are you investing inside it? Are you owning pieces of it? Are you directing capital through it? Or are you designing the structures that everyone else has to move through? Because once you understand that, the question changes. It's no longer, how much do I make? It becomes, what kind of power does my money actually give me? And for most people, that answer is uncomfortable. Because high income can look like power, while still leaving you dependent. A large portfolio can look like freedom, while still leaving you reactive. Access can look like control, while still leaving you outside the real decision. And ownership can look like the top until you meet the people designing the architecture above it. That's why the vice president walking out of that meeting couldn't shake the feeling. He had the title. He had the income. He had the model. He had the presentation. He understood the mechanics. But he didn't control the outcome. Someone else did. And not because that person worked harder that week. Not because they knew every formula better. Not because they spent more hours in Excel. But because they sat at a different level of the structure. They were not being paid to explain the deal. They were positioned to decide whether the deal should happen at all. And once you see that difference, you stop confusing income with control. You stop assuming that making more automatically means moving up. You stop measuring wealth only by the number and start measuring it by the role it gives you. Because that is where the real hierarchy lives. Not in salary, not in status, not in lifestyle, but in control. So, if this made you look at the 1% differently, if it made you question where you actually stand inside the system, hit like, subscribe, and turn on notifications. And comment below, which level do you think you're operating in right now? And what would it take for you to move to the next one?